So they're all getting in. So I think we'll wait for a minute more so that people can join in.
Recording in progress.
Yeah, Mudit.
Hi, uncle. How are you?
Good. Garima madam, namaste.
Sir, good afternoon.
Good afternoon. Ajay.
चाचा थे तो गुड इवनिंग गाड़ी में या प्लेन में रहने वाला था
अभी जान लग रही हूँ मैं ऑन द वे जो गाड़ी में बैठ रहा हूँ इसलिए मैंने रिक्वेस्ट कर ली थी ना आपसे हाँ और सब बढ़िया तो वी हैव 5 स्पीकर्स टुडे
Very nice. Very good.
And today is also World Wheat Flour Day.
Wheat flour, correct.
All right. So, just in a half a minute, we will start. All right, we begin. Thank you, friends. Thank you, everybody, for joining in the second part of our webinar series, WPPS webinar series on building smart wheat procurement strategies for the new season. In the last one, we had a list of eminent speakers, and I hope some perspective has been gained by everybody. People, especially who can't go out in the field and who don't have access to information which consolidators and larger companies have. People have open-heartedly shared most of the information they had last time. So I look forward to another interactive session. Any questions that participants or attendees might have, please put it in the chat box. That will make it convenient for us to pose them to the speakers. And I will just like to remind you that today is 20th March 2026 is the World Flour Day. And WPPS, along with Stern Ingredients, is trying to promote the event, the consciousness and awareness about the World Flour Day. So please do watch the podcast, which is very well made on the occasion of World Flour Day, and circulate it amongst your friends and relatives. It's a promotion of our very own business. Also, just a quick mention that on 9th, 10th, and 11th of July 2026, WPPS is planning to host its annual seminar at Varanasi. We are just in the verge of finalizing our logistical things, and then we look forward to everybody's participation. So thank you for your patience. I would now first request Mr. Ashish Chaturvedi, General Manager Grains at Olam Agri, to come forward and let us have his views on the current season and the way forward. Ashish, you have 7 to 8 minutes. The floor is yours. Please.
Sure. Thanks a lot, Ajay. Thanks a lot, everyone. Thank you for inviting me to this webinar. And I think this is the right time. Wishing everyone a very happy new year. And now we are heading into the harvest season for the Rabi crops. Expecting a good crop across, all the complex grain complex. So talking about the wheat situation in India today, I think over the last 2-3 years, the way we have moved ahead, I think we have moved to a very comfortable situation now. In 2022, we were the overall stock situation in India was very scary. The government was sitting on only roughly 7.8 to 8 million tons of wheat stock. That was a really scary situation. The government controlled the situation through multiple policy decisions, and today we are sitting at a very comfortable situation on wheat stock as well as rice stock. And looking at the current geopolitical situation, I think the stock situation really gives a lot of comfort to every individual in India today, and of course the government, because the situation is escalating every day, and we don't know where it is heading to. So, in this kind of a situation where a couple of weeks or months back we were looking at situation where it was seemingly very difficult to handle the kind of stocks we were sitting on, but today those stock situations look pretty comfortable and at least comforting to a great extent. So from 2022 to 23, I think we have moved quite ahead, and the overall production numbers have also significantly gone up thanks to the overall good monsoon situation and the weather patterns that have played out in favor of India, and especially for wheat crop. So this year we expect that the government will open at a stock level of 21 to 22 million metric ton, which will again be a very good stock situation. Along with this, they will open up at around 68 million metric ton of rice stock. So put together 90 million tons of stocks which India will have as on 1st April. This is at least 15 million tons higher than previous year. So definitely shows that the overall food availability situation in India is really comfortable, and this definitely gives room for good amount of exports both in rice and also if required in wheat as well. And I think government has done a brilliant job in looking at the situations well ahead, and they have already liberalized the policy to some extent. Hopefully, if this situation in the global context prevails like this, and the geopolitical issues continue to, play out in this manner, definitely Indian wheat will find its way into the global exports channels. Uh, so government is expecting a production of 120 million metric tons. Generally, how we look at the overall S&D situation in India is basically at the carryover stock. And definitely this year, as I told, that the overall carryover stock will be at least 21 million metric ton plus for government. And also this year, the private carry is also better than last year. So put together, I think the overall carry over stock is good. The overall production also is expected to be better. The sowing was on time, but the temperatures had really increased a lot in the northern states. That was a worrying thing. But over the last 2 days, the western disturbance that has played out, this would be suitable for some states until and unless there is very heavy shower with wind. Only in those situations it can create some impact on the yields. Otherwise, this looks to be a favorable shower for the wheat crop, which will help in getting the harvest delayed for a week or so. But definitely it'll add on in terms of the yield of the overall stock. So I think for Indian wheat situation, we need to tactfully uh, be looking at few of the things. One is that now in next 10-15 days we'll be more clear on how the yields are coming out. We expect that in Punjab and Haryana and little bit in the eastern UP part where the temperatures are very high, we have seen the numbers. Those are really scary. So the day temperatures have exceeded by 4 to 5 degrees as compared to the range in which it should be during the milking, during the grain filling stage. So in some of these states, probably there could be some yield impact. But because this year the overall sowing was on time, probably that yield impact should not be to that extent. But definitely, so in next 10-15 days, we need to very closely watch the overall yield situation across the different states. Second is that now in the next season, we definitely expect that the fertilizer prices are going to be impacted because of the geopolitical issues and the energy crisis that will pan out. So next crops are definitely going to be impacted. And looking at that, we'll have to also see that whether the government will be willing to continue with the liberalized policies which they have adopted at the moment. And obviously, there are the chances of El Nino year playing out next year is also a big threat. So we'll have to also watch that situation, that what kind of impact it can have on both, rice and other kharif crops, and leading to that, what could be the later on impact on the wheat. So these are the major watch outs for us. And obviously, if the geopolitical issues linger on a bit, I think comfortably India will be able to export the targeted 2.5 million metric tons of wheat and another 1 million metric ton of the wheat products that the government has allowed for. So yeah, so those are my thoughts, Ajay ji. Yeah.
Thank you very much, Ashish. So you are actually seeing Indian wheat, being exported at 280, 290 US dollars in the coming few months.
So exactly, we don't know at what number probably India will, suddenly the exports can go out. But as on today, the situation is that Argentina is the cheapest source, and what we are hearing is that now because of the increased freight, their landed cost also to Southeast Asian countries would go up, and the next crop on offer will be the Black Sea wheat from Russia and Ukraine. So today, Argentina is around 270 levels already landed to Southeast Asian countries. The Black Sea region is at 280, 85. And today, if we look at the Gujarat wheat costing, roughly it is around $270 FOB. Plus, if you take the container freights, it is $5 to $8. So we are already well in line with the global prices. And if, God forbid, there is some attack on the Suez Canal, so as of now, Strait of Hormuz is definitely affected a lot. But if in case the escalation goes to Suez Canal, obviously the Black Sea movement will completely be impacted, and then India will have the play in the overall scheme of things.
So, like in the stock market dip, everybody is calling up to find out whether we should buy or no. Would you recommend millers and traders to stock up and at this dip? Is it a good value price in your view? What is being seen, especially in Gujarat and few parts currently?
So Gujarat definitely, I think, is priced really very competitively today. 2350 to 24,000 is kind of range for the milk quality, and I think this is well below the MSP price, at least 2 rupees lower than the MSP price. So I think for the industry, actually, what has happened last year, nobody got the carry, and everybody have burned their hands. So everybody is, just trying to wait and watch the situation. But I feel these are really good levels to buy at, because once the government will be active in all the states, for the next 2 months, there will be definitely pressure on the supply chain, and the prices are expected to go up. So these levels look to be really comfortable levels to buy at. You have nothing to lose from here.
Great. So, thank you, Ashish, for giving the overview of Punjab, Haryana, the standing crop, UP, and all these states. And, buy the dip is the message that seems to be thing. Of course, with the disclaimer that you're not responsible for anybody's. Agar bumper profit ho jaye to you're welcome to give a share. But it seems attractive at these prices. But as you rightly put it, when you look back, the past 1 year has been quite a different year for millers and stockists. So, with the fear of that, how many of them will be able to overcome it? And because I also think that one thing was there was a huge lack of demand in the last year from major users. They seem to have already pre-booked their entire year, which left a very illiquid cash market at the end for both wheat and flour. So let's see how this year plays out. And thank you so much for sharing your insights. I will come back to you if there is any question directed towards you, Ashish. Thank you so much once again.
Sure. Thank you, sir.
Now I would request Mr. Sandeep Bansal, Managing Director of Grain Flour India Private Limited, and Shri Govardhan Roller Flour Mills Limited, and also somebody who's actively expressing his views on Twitter. I see him. So, Sandeep, the floor is yours. Please let us know what do you think of the oncoming season and which are the good, places where somebody can place their bets and stock this year.
Thank you so much, Ajay sir. Wish you all a very happy new year and Eid Mubarak to all of you. And to start with about the current supply scenario and the expectation we are heading towards the next year, I would say whenever I work on wheat procurement, I calculate three factors. That is, first is carry, second is crop number, and third is the government policies. So while talking about CCG, carry is good enough, then crop is looking reasonable. There were some concerns regarding the heat that we were noticing in late Feb and earlier in March, but because of the last 5 days weather, things are getting back to normal in terms of temperature. So I'm not expecting any major loss in the yields in terms of heat loss. Although we have witnessed some rain factor across India, I would say that because of this rain, quality may get damaged, but it won't impact it won't make any major impact on the yields. So comfortably, we can say if we have in any case any crop loss, that would not be in the range of 5%. So crop is looking good. Then the third factor comes the government policies. Everyone knows what's going on with the government for last 4-5 years. In 2019, they had offered an open sale policy with the carry cost factor by increasing 55 rupees every 3 months. Then all of a sudden, when they didn't got any response, they moved for a 165 rupee discount. In 2022-23, they were late to offer any wheat because of the lower inventories. Then on 26th January, all of a sudden open sale comes, and not only the open sale comes, within 15 days, they come up with the discount of 200 rupees, then the Pan India. So things like that are quite surprising, and no one can actually judge the government behavior, how they will deal with the situation. Having said that, I would like to add one thing, that as many of the people are expecting more rain in coming 10 to 15 days, if it persists, if the quality really gets deteriorated because of the rain and we have a luster loss situation, then looking at the huge inventory around 21 to 21 million ton as an opening for the next year, I would say that government might be forced to offer the next procurement number. Let's say the government procures 305 lakh ton of wheat, then they will be forced to offer the same quantity in the market. Last year, they had offered only 5 lakh ton in the open sale and rest of the PDS numbers. But if we have LL issue, then the extra quantity other than the PDS would be offered in the market. So if we consider all these things, I would say that the coming year won't be offering much for the stockist. This is about the wheat returns. About the demand factor, definitely we'll have some better demand, because we have noticed in last 2-3 years that whenever the maida market in the northern India crosses the 30 rupee level, then suddenly we see a kind of drop in the maida consumption. And looking at this year, we are expecting maida to trade in the range of 26 to 28 in first quarter at least. And if the crop is comfortable, government is favorable in terms of supply management, then we are not expecting maida to touch 30 rupee across the year. So we'll be definitely having good demand. Now, the key factors we have to look for is because of this war situation of Iran and Israel, we have to see what impact it makes on the Bangladesh demand of wheat, one. And secondly, the flour export parity we have to see for the Middle East area and all. So these two factors may determine Q1 and Q2. But overall, things are looking quite comfortable. There is no concern. And I would just like to close it with a simple saying that good carry, good crop. No tension for the miller. Thank you.
Thank you. Thank you so much, Sandeep, for sticking your head out and neck out rather, and what you call claiming that you don't see any runaway markets this year, and primarily because of government's active participation in the marketplace. And you have well illustrated in the past 3-4 years how government has had a policy which has gone from north to south as far as pricing of OMSS sale is concerned, and there is nothing stopping the government from selling it at free or at 2 rupees or 20 rupees or 30 rupees, whatever price they deem fit. So that is one sword hanging on top of every stockist, I guess. And the government's proactiveness in trying to control the market is a big factor. Thank you once again for giving us the view both as a stockist would and as a miller. Thank you once again. Thank you, Sandeep.
Thank you so much, sir.
Now I would request Mr. Sahil Sethi, a trader grains from Louis Dreyfus India Private Limited, to give his views. And there is a special request from a participant who wishes to know about Gujarat crop, whether there is a black tip problem over there. It's how severe is the problem, and your other views on the national crop as well and the global scenario. Sahil, the floor is yours.
Thank you so much, sir. First of all, a very good evening to everyone that is part of this webinar. My name is Sahil Sethi, and I'm currently working with Louis Dreyfus Company as a grains trader. I would first like to thank WPPS for giving me the opportunity to speak in front of such an esteemed panel. Secondly, to start off, I would like to keep my discussion segregated in two parts. Firstly, we talk about the global trends influencing wheat trading strategies. Can benefit from better market intelligence and global benchmarks. And secondly, then we move to the more important topic, naturally, is about what is happening currently in the domestic market, what are the current bullish trends, bearish trends, and what are India's wheat export potentials, along with the threats of the government policy. So I would like to start with a very simple question, which is, if wheat is grown locally, why are its prices decided globally? That is what I see is the reality of today's market. Wheat is no longer a staple crop. It is traded globally. It is geopolitically sensitive. It is a data-driven asset. So if you're not watching the world, you're already falling behind. So let me tell you about what is actually driving the market. So firstly, something that all of us know is that volatility is the new normal. We are producing more wheat than ever before, and yet prices swing widely because one issue in Australia, maybe a drought in Australia or any sort of a conflict in Black Sea or even an export ban, can move prices overnight. Secondly, power has shifted. The center of gravity in wheat trading has moved global wheat trading has moved towards the Black Sea region. Today, countries like Russia are not just participating in the market, they're shaping the market. And thirdly, which is the game changer, is now information and not just supply. I mean, look at us. We send a message on any common WhatsApp group, and it would be rare if the entire industry is not informed by it by the end of the day. Information has taken over on some levels, the natural flow of supply and demand. Now, if we talk about what is so firstly, talking about the wheat production numbers. So when we started this year, when sowing started, we were all very bearish naturally, because the numbers that came out were signaling an at least 3% higher production than the previous year. So if we consider last year's production, say, to be 100 million tons, we were taking a number of about 103 million tons in the coming year. However, post-Holi, I would say, at the start of March, the temperatures across geographies started going up. And like Ashish sir has already mentioned, we also observed that the temperatures were going almost 4 to 8 degrees higher than the normal temperatures. And hence, that made us retract our numbers onto the same levels of production that we saw in the last year. So as far as we are concerned, we feel that the production numbers might not be higher or might not be lower. The best guess that we have today is that the production numbers are going to be similar to last year, which in itself gives a sign that there is going to be ample supply available for the market. Now, if you look at what is happening in our country currently, which already a few speakers have spoken about, which is the storage issue that the government is having. It is a clear sign that the government is having a massive storage issue, because the recent decisions that they have taken are all signaling towards that. Firstly, the government opened up wheat exports. Up until last a couple of years back, we were talking about importing wheat, and suddenly in a couple of years, we've just come out and said that now we are in a position to export wheat. So there is a lot of uncertainty in the market regarding this, and I will talk about more about on the wheat export front, on the prices and all of these things later in my speech. The second thing is that the government has again announced OMSs, free-flowing OMSs for non-procuring states. Though the prices today are not viable to add these destinations, but it is a sign that the government is quite comfortable with their supplies. The third thing is release of PDS. 3 months of PDS being released in one single month. This is something that was taken up by the government last year as well. And while most of us sort of overlooked it, but the supply that came through this PDS also was a major reason for the markets to be bearish last year. Thirdly, the government is continuously delaying the purchase of wheat. In fact, in Madhya Pradesh as well, instead of 1st April, in some of the geographies, they've already announced that the procurement will only start from the 7th of April. And this is frightening the farmers, and this is also leading to the markets continuing to be bearish, right? And if you look at the procurement numbers that the government has taken out for this year, we were all expecting, I was talking to a number of millers, a number of my colleagues in different companies. We were all talking about 35, 40, and the government might even take up 45 million ton, but they are showing no interest as such. They are not looking to have the same scenario in wheat, what they suffered in rice. The targets that they have taken is only of about 30 million metric tons, which is similar to last year. And from what we see is that the lesser the government procures, the more bearish the market becomes, because the more quantity of wheat will be freely available in the market for millers to purchase. Now, what are the bullish trends that we are seeing in the market? The first one being, which is the most common topic that everyone's talking about today, is wheat exports. So while wheat exports is a scenario that is to be looked into in the coming year, but let us first evaluate our options. So if I talk about Southeast Asian nations for April deliveries, to talk about Indonesia first. In Indonesia, the 10.5% protein for April, the best offers going in the market are somewhere in the range of 273 to 275 USD, which translates to about 2585 landed out there. If we were to compete with these prices, considering that a vessel cost, the vessel freight cost would be at least 1500 to 1800 rupees per quintal, and the fobbing cost at Kandla would be somewhere about 750 to 800 rupees a quintal, 750 to 800 rupees. We see that the prices, unless and until Kandla prices come down to say about 22.75, or if the dollar goes very close to 94.5, 95 levels, we don't see a lot of shipments happening at these current levels, because from what I understand, the current prices at which Kandla deliveries can happen is somewhere in the range of 23.35 to 23.40. You negotiate too hard and maybe you get it at 23.25, but nothing lower than that. Similar is the case with Vietnam and Thailand as well. But our biggest bet is on a country which is Bangladesh, which is our nearest country. We can easily export through trucks, we can easily export through rakes. But the point is, how much does Bangladesh eat? Bangladesh last year, they imported somewhere about 8 million tons, if I'm not wrong, somewhere in the range of 8 million tons. In the coming year, India comes in parity with Bangladesh only between April, May, June, and maybe till 15th of July, because after that, the Black Sea crop hits, and that is where our parity goes down. Currently, if you talk about Bangladesh, there are a few vessels that came into Bangladesh a while back, and currently ex-Chittagong, the vessels that have already arrived there, ex-Chittagong is being sold at about 260 USD per metric ton. Now, what we should all understand is that our target buyers in Bangladesh are not sitting in Dhaka, are not sitting anywhere close to Chittagong. They are sitting close to our borders, where the cost of bringing the cargo from Chittagong to their flour mills is about 30 USD, right? And when we export, so if I export from Uttar Pradesh, I would send it via rakes to the nearest station, which is Rohanpur in Bangladesh. The freights for everyone is available on Voice itself, so all of us can check the parities. But the point is that the unloading cost from Rohanpur to these border mills is about $18 per metric ton. So technically, if you see from 30 and 18, we have an arbitrage of about $12 between us and between our competing nations. Now, if you talk about Bangladesh, currently the best offers that are going in for April are in the range of 285, 287 for 11.5% protein. If you back calculate that, that comes to about 2630 on a 92.5 or a 93 USD INR exchange. So we are technically talking about a rake loaded from UP, if I would say bilti cut rake जो हम बात करते हैं हमारी देसी भाषा में 2475 से 2480, which seems more than likely to happen. So from what we are seeing, exports from India to Bangladesh will take place, both from Bihar as well as UP. The problem that we see in this entire scenario is the supply chain. Because whenever wheat exports from India to Bangladesh happen, say for instance, the government has allowed an export potential of about 2.5 million tons. Even if I load one rake on an everyday basis for the next 90 days from April to April, May, June, the number doesn't even reach 500,000 tons. And we all know that in terms of trucks also, 100 trucks is about 2,700 tons. So even if we talk about, say, 10,000 trucks being moving from India to Bangladesh every month, the number is not that massive. So what I want to say through all of this is that we are sitting in a very difficult scenario in terms of supply. Yes, there are weather concerns, but the crop number is so high that even with these weather concerns, even with a cut of say 3 to 5 million tons, the supply issues would not be that massive for a country. Another important point to note is that last year during March, if all of you all remember, people who are part of this webinar, the new wheat that was purchased by the millers last year in March, the quantum of that was quite high. A lot of wheat was moving from MP, from Rajasthan to across the country. If you look at that, comparing that to what is happening this year, the number of wheat, the quantum of wheat moving, new wheat moving to these particular millers is fairly low this year. There is a huge carry that we are seeing from the previous year. And not just that, this March consumption year-on-year basis, which has dropped this year, will also lead to a further easy supply in the market in the coming months. So when someone asks me that whether should I stock wheat today or not, it's not about the entry point. It's about your exit point. Please understand. It's not about where you're buying today. Consider if you are buying today UP, or let's say we buy today UP at 2400, 2450 levels. In 5 months of time, this goes up to 2600, 2650 levels. For a miller sitting in South, that means you're getting your wheat at your mill somewhere at about 2900, 3000 levels. Are you seeing a price of 2,900 to 3,000 in the month of October, November, December? That is the question that needs to be asked. And that is what you need to ask yourself when you are stocking wheat. The prices in Gujarat are very lucrative for someone who is sitting in Gujarat. Is it lucrative for a miller sitting in South or East to carry that wheat for the next 6 months with the freight, with the unloading, bringing it to your mill? That is the question that needs to be answered when someone talks about stocking wheat. So that is all that I would like to share through my speech in this webinar. Thank you so much.
Thank you. Thank you so much, Sahil. So Sahil is not very gung-ho about, like last year, everybody bought wheat out of fear that they might not get it. And this year, everybody is fearful about buying wheat. And as you pointed out, even the government is trying to stay away from wheat and using their own tactics to procure not more than 30 million tons.
Right.
Just one more point on the qualitative aspect of Gujarat, Sahil. Any input? This is a specific.
Yeah, sorry, I forgot to answer that. So when the Gujarat harvest, when the arrivals started picking up, initially we saw a lot of black tip issues going even in low-con wheat as high as 10%. which is why we personally delayed our unloading at Gujarat. But currently, the situation is much more controlled. Local wheat is having a black tip of somewhere in the range of 5 to 7%. Milk quality, yes, it is going up to 8 to 9%. But all in all, I would say, yeah, compared to last year, the black tip is an issue for Gujarat. But now, as the arrivals are picking up and as the crop keeps coming out of the fields, it's getting better. I think the crop at the start had a lot of issues in terms of black tip, but now it's quite better. I mean, we are getting wheat much lower than 5% black tip for local one wheat that we are purchasing. So I think we'll sail through in this regard.
Good. Thank you so much, Sahil. And the silver lining could be El Nino, Bangladesh, rupee depreciation, the war
Correct.
prolonging. But you
Correct.
really don't see much happening in spite of all these probable factors as far as wheat pricing in India is concerned, because we are still way off the mark compared to global prices.
Sir, one last point that I would like to make. It's a very, I didn't prepare this point, but I'm just saying it out loud. See, last year, all of us were very bullish. The entire country was bullish, and we were wrong. We were blatantly wrong, right? This year, the entire country is completely bearish. So, I do tend to believe in law of averages somewhere. And there are, you never know. We are talking today about a complete bearish trend. Maybe in 10 days, there is some weather concerns or there is some INR depreciation. That is something that is not in any one of our control. So today, going by fundamentals, we are in a bearish year, but unless and until something happens, yeah.
All right. Fingers crossed. Thank you so much, Sahil, once again.
Thank you so much, sir.
Thank you. I would now like to request Mr. Mudit Goyal, Managing Director, Megastar Foods Limited, and one of the dominant players in the wheat flour industry, to come out and give us his perspective as to what's happening in Punjab, what is his outlook for the coming year, and how does he see the wheat product market panning out, in terms of demand. Mudit, the floor is yours.
Happy New Year, everyone. Good evening to all the distinguished panelists and industry colleagues. So I would like to share a small slide in which we can see how the things are moving.
You're able to upload it?
Are you able to see my slide?
Yes.
Yeah. So as everybody said, and I'm all the same point of view with a little bit of hunch and other things pointing out Punjab and Haryana. So I'm seeing 119 million of output as per the number government also shared with your apple and my apple, with the 34.7 million of hectares sown, granting 3 million of export quota. So moving ahead, this is the basic supply, demand, and export analysis which we are at looking at. Government will come up with 22 million opening stock with the projected surplus of 10 millions. If I take the production of 119 million and a consumption gap of around 109 as per last few years scenarios, government might end up with 32 million ending stocks if they go like this year with a 20 million disposal. So yes, Sahil has also indicated there is a price gap of around $60 to $80 right now. The highest visibility we are looking at Bangladesh and Nepal, but maximum 50 to 60,000 tons per month if we load it by trucks. And if I go with medium visibility, if war goes haywire, then small parcels can go to UAE or Yemen. Very low visibility for the Southeast Asia and Egypt. Going forward, as Ajay asked the question about the Punjab and Haryana status right now, what happened is Punjab farmers, due to high heat, has lost two water irrigation systems. So they have yielded the wheat with two waters. What happened after that? Due to rain and HDW, the wheat crop has flattened down with the severity of right now around 10% in few areas, 20% on the few areas. If I take the average, should be somewhere around 12 to 13% crop has been lost. But I can see a high risk of harvest time rain, which can lead to quality degradation, mycotoxin risk, and logistical delays because people will not buy high moisture wheats. So this was the metrics coming around. In April, we are focusing that there will be around 7-degree high temperature compared to last few years. But yes, the things, optimal things are being shown. If I see around production is 119, estimate surplus, if I take 109 of consumption, market price should be stable this year. There should not be very heavy adverse. If there might be, if there is a yield loss this year, then yes, then we can see a little bit of dip in the quality optimization we have to plan on. And procurement, government procurement has been rightly said at 30.3 million tons. So according to me, everything depends upon the government procurement numbers and how government react this year. All the as per this is the baseline prices which I am seeing. So after this, all the plus and minuses are going to happen only because of the government interventions. So as per the IMD data, April 1 to 15 will be a little bit of medium harvest in optimal condition we are seeing. If due to these rain, a 10 days delay should will be there because of high moisture in the soil and grain. So there will be a chance of high rising temperature and quality risks. Leading to May is very much hotter, a critical zone we can say. So if I talk about flour millers, there is a basic uncertainty about the policies, how to plan this year, how to go with the procurement, how to go with the selling, how to go with the purchase. So it is very unpredictable scenario right now. I think so. Week or two will start clarifying things if I talk about. So that's the basic viewpoint I can share.
Thank you, Mudit, for freely sharing all your database and information and your analysis on the current situation. And as again you put it, there are a lot of uncertainties in the marketplace as to nobody knows how the government is going to be reacting in the future. So I think reading the government's mind is a big thing. None of us have that capability. We all have our numbers. We know the global scenario. We know what's happening in our backyard. But as far as the government is concerned, that's the elephant in the room, which will really, can change the course either way. But it seems like the government will be under pressure to procure more and to release more stocks in the coming year. That could be a drag on the entire marketplace. And also, I guess the enthusiasm is lacking this year to actively, pursue a stocking policy or build up an inventory or go long or go short. Just a lot of disinterest I notice amongst generally amongst people whom I am speaking to as far as trade is concerned. Thank you once again, Mudit.
Thank you.
I would now like to request Ms. Garima Jain, CEO, Torque Commodities India, to come forward and give us her experienced analysis on the current situation and recommend or suggest what she thinks would be the ideal way forward for stockists and millers, and which could be the ideal pockets where somebody could get good arbitrage this year or be a safer bet. Garmaji, your turn.
Thank you, sir. All tough questions. I don't know what is a safe bet. But let me take the audience first towards what is happening in the geopolitics, global markets. As far as wheat is concerned, we have to understand that Black Sea market is the one which anchors the global market. And this year, Black Sea supplies and EU supplies are very good. Add to it Argentina supplies. So globally, wheat supplies are in very comfortable situation. The recent Middle East tensions are obviously wearing a bit heavy on the energy and fertilizer prices, as well as the crude and the freight prices are high. So that kind of puts India, or let's say talks of Indian exports are back because of the current situation. But as soon as the situation stabilizes, which we do not know when it is going to happen, I think Black Sea supplies will normalize the market. It will weigh very heavy on the global supply side. FX currently is very supportive, so that helps the Indian prices a bit. So that's on the macro side that we need to be cautious on how the global supplies are, which is very good and comfortable. And therefore, Indian export program will be dependent on how this entire macro situation evolves eventually and what kind of windows we will have for our export program, which is, of course, very limited today to 2.5 million tons. The second thing that I want to raise today is about quality deterioration, which has already been highlighted by our panelists here. But what I want to highlight is that we have to compare last export year, which is 21-22 of India to current scenario. So last time when export happened, India enjoyed very good quality in those years, so much so that we were able to give very quality cargo to people in Africa, to buyers in Africa, and to Middle East. This year, however, the situation is different. And why I say so is because number one, we are witnessing a bit of a black tip issue in Gujarat. And number two is that the recent rains that are happening, we do not know the impact yet, but if it leads to luster loss and crop damages and quality does not turn out to be very good, it'll be a dampener for the Indian wheat quality. So that's point number second. Coming to Indian scenario, we know that government stocks are multi-year high. We are reaching the same government stocks. It was very heavy in 21-22, so we are almost nearing the same kind of a situation. When government starts this year with around, let's say, 21 million tons, and they will be able to buy about minimum 30 million tons, estimated about 30 to 33, or let's say even if 35 million tons. What does it mean? It means that Government of India will have about 50 million tons of crop, 50 million tons of inventory with them, minimum, if not 55. Even if they were to distribute slightly higher than last year, let's say 25 million tons, even then the next year carry out will be very heavy. Add to it the private market carry out of 3 million tons this year. So what does this mean? This means that the supply side of Indian wheat S&D is very heavy. And again, we need to be cautious on that because when that happens, we have to assess the demand side also. I will put the demand side in two contexts. Number one, on wheat alone, let's say the demand side of India, the structural demand of India, which is the flour milling demand, will increase slightly or will be mostly stable. The policy level demand of India, which is the government programs, last year they did about 20 million tons. We don't see a huge increase in there. So demand of wheat alone will be slightly stable to positive, not a very huge consumption increase is what I would say. But the second point is that we cannot look at wheat in isolation. I always like to say that we have to look at food, feed, and fuel complex in totality. So how is the maize crop? What is the impact it is going to create on grain and via ethanol? What is the impact it is going to have on rice? Overall, still looking at food, feed, and fuel complex, it shows that the overall complex is very comfortable. And again, rice stocks are very good. Maize production has increased this year, and wheat is also very comfortable. So that's the overall context of Indian wheat S&D coming to production, mostly same as last year. Punjab, Haryana, and UP will be impacted by the recent rains. We are still estimating what is the impact going to be. Even if it was 2 to 3%, we will be back to production same as last year, so no big impact there. And all in all, I think the bonus and procurement of the government will provide some stability to the market. It'll give some window for India to be back in the export parity, primarily for Bangladesh. Looking at export parities, Black Sea today is offered at 240, so let's call a freight of 40 to 45, which means Bangladesh is 280 to 285. Back calculate Indian FOB at 270. We are there in the export parity. Yes, we will be able to do a bit of export. Again, differentiating between this year's export program and the last export campaign. When India was exporting last time in 21-22, at that time, India was in parity by at least $70-80. It was a handsome spread versus global markets. So now putting everything in totality, summing up the direction for future for wheat in India, global market supplies are heavy. There are war disruptions, but we cannot discount the good crops worldwide that are there. For India, again, supply side is heavy. Government is at a very comfortable position. The good part is we are out of the policy crunch and the various kind of restrictions that the government was putting. So we are out of that. But again, markets will be very stable, will be very range bound. Even if India was to export, there will be limited export, keeping in mind the quality cautiousness on what we are producing, what we are finally going to have this year. And even if it is 2.5 million tons, I think government is taking a very cautious approach this time. The reason being, last time it was an open tap, and suddenly government had to put export ban. This time they want to monitor it very closely. El Nino situation arrives, they are there to take a policy action. So overall, Indian market looks to be stable, range bound. Current prices in Gujarat looks very lucrative, no doubt about it. Looks like to be a bottom. There doesn't seem to be any further downside in those markets, but yet limited upside. That's how I would take a look at the markets today.
Thank you, Garima, for pointing out about the Gujarat qualitative aspects, which will be an overhang on the export side, and how other grains also matter. The entire food basket pricing matters, and the correlation between wheat and rice and corn. All these things will also matter going forward. So, from what I can understand, is that there is this big overhang of stock building up in the country, and the millers have a big hangover of last year. So I don't know what is going to be the clinching factor for somebody to take a call. And with this, I would like to first thank all the panelists. That's Ashish, Sahil, Mudit, Sandeep, and Garima for having volunteered to participate in this program and share your views. Just before signing off, there are no other questions on my chat box. There is a little film that we would like to play out to everybody, today being World Flower Day. I would request everybody to be patient and please watch that. Thank you so much. Please don't sign off.
The voice is not coming in the video, just wanted to highlight.
I'll just inform Raj. He's probably at Rajkot Airport or somewhere. 1 second. I'll just get that right, but give me a second. Sorry, I think there is some glitch now. We give us half a minute more. If it comes through, well and good. Otherwise, we will send the link of the podcast on WhatsApp. Do watch it. I'm just, Raj Kapoor is trying hard. Give him half a minute.
The parota in my college canteen.
This is celebrated universally, and it is celebrated by all wheat lovers, flour lovers, millers, bakers all across the globe. On the occasion of Wheat Flour Day.
Welcome to the podcast. What does wheat or flour mean to you personally?
As the World Flour Day says, flour is the fountain of life and water.
I think the issue persists.
Yeah.
So
I think there's some network or some technical issue that's happening actually.
So we'll just sign off, right?
Cool,
Thank you.
cool.
Thank you,
Thank you so
everybody.
much, sir. Thank you so much.
Thank you very much.
Thank you so much, sir.
Thank you. Thanks, everyone.
Thank you.
Thank you, Ashish. Thank you.